Hello, everyone, and thank you for joining us for another episode of the Financial Commute. Our Chief Investment Officer, Meghan Pinchuk, is joining me today because all people want to talk about right now are investments and new investments.
The best topic, so they have good taste.
Yeah, so we're here to talk about one of your favorite things and something that you sort of oversee here at the organization, which is new investment ideas. So I'm just curious, how many investments do you look at in a given month, year, day, week? What does that look like?
That was actually multiple
multiple.
questions. Yeah. So we right now in particular, we're seeing a lot of new investments, and so we get them in a few different ways. One is I'm just constantly inundated. So emails, calls, different things of people sending us, here's a deck, look at this new exciting thing. This is the best, this is the best. No, this is the best. They're all fighting over it. So that's fairly constant. So you peruse dozens and dozens of, quick decks, a quick assessment of like, is this interesting? Do I want to spend more time on this? Follow-up calls. The team probably takes on average maybe 4 or 5 calls a week with something new, to just a quick intro. Is this interesting? And then, the deep dives when you're like, okay, this is good. Let's get the rest of the team involved. It's obviously keeps whittling down.
So you'd say probably 100 to 200 new investment ideas you sort of have intro calls in a given year.
Yeah, I think that's probably fair.
And then you narrow it down, and how many do you do further due diligence on or approve in a given year?
Or in the past, I would have said, especially in the alternative space, just a couple a year, because we're focused now on a vehicle where we're trying to get more capital deployed into private credit. That number has gone up significantly. So we've actually diligenced and approved quite a few things in the past couple of months. But normally it's just a couple a year. And now just the nature of having this vehicle that makes it easier to access, as well as I think a larger opportunity set with what's going on in the world, has increased that number considerably.
I could only imagine. I mean, I know that just someone that reads the headlines, partly because I enjoy this part of the job, but also, clients come to us as well. The term alternative has become a very hot word this last year. Although we've been dealing with alternatives for several decades, and so because a lot of firms know that we do invest in alternatives, they tend to come to you directly saying, oh, I know Morton might be interested in this.
We definitely get a lot of proactive reach outs because people know we're very active in the space. But I agree. I think the word alternative has been somewhat cannibalized. It really means everything other than stocks and bonds, but it's become a lot more things that are more pseudo stocks, pseudo bonds, and then that counts because it's not, it's not the exact thing. It's adjacent, so therefore it counts. And so there's a lot of junk out there, and you got to weed through it. But some of our best ideas actually come from other groups like us. There aren't that many. There aren't that many either independent advisors or even big pensions or things that are very focused on niche alternatives. But the ones that are great for idea sharing. So when it comes from one of those groups, or even very specific marketers who I know what I like, that's you take those calls.
I know what it's like sort of being outside these walls because I worked in other parts of the industry, whether it be Morgan Stanley, Fidelity, and, not trying to pick on them, but they typically just invest in stocks, bonds, mutual funds, have very little to no alternatives. Every once in a while, they might have a little bit of exposure to gold, and they'd call that an alternative.
Not usually, but...
But in times of volatility like we've seen this year, sometimes those advisors, those firms say, oh, if you want less volatility, you want more safety, you should consider an annuity. And that to me, it puts a bad feeling in my stomach.
Look, I think if your options are stocks and bonds and you're worried about a world where even interest rates are going up, so your bonds aren't your safe money, I get it. Annuities in some ways could be an attractive option. I think we are fortunate in that we have a lot of options where the focus of it is targeting stable income. So theoretically what that annuity is supposed to do. And so it feels a lot better from the standpoint that, we're in it, we can get out of it if need be. So it's not something where there's penalties and big costs necessarily to sell. And then it's also, again, you're going to have a consistent income stream and you're going to hopefully keep your principal at the end of it. So it's not something where by annuitizing or taking an income stream, you're giving up access to that money. So I think it can be a lot more flexible looking at it from that standpoint, but I get it again if you don't have other options. But you have clients who ask you that. What do you think about annuities?
I mean, look, I think that, dealing with an insurance company, you're transferring risk. You're either transferring the risk of loss of income or you're transferring the risk of loss of value. And hopefully people are doing their research to understand the true risk that they're taking on by going into a lifetime contract that relates to guaranteed income stream or a protection of value, and hopefully exploring other alternative options or things that they can leverage to accomplish kind of both of those and not give up the flexibility to change your mind down the road.
Yeah, again, there's times where if you can get a lower cost option, sometimes there's tax benefits. One of my pet peeves is I don't like to see annuities in IRA accounts because in theory there's a tax benefit to an annuity, and so now you put in an IRA that already has a tax benefit, and it's negating that piece of it. So again, there's times where it can be useful for planning. I think we have tools that we like better in this environment to get stable income, and so for now at least that's been more of the focus. But we've looked at and even done pieces of annuities in the past, so there's time and place for it, I think.
We'll agree to disagree on a time and place for annuities.
I've seen some where actually the insurance companies are like giving it away and the terms are really advantageous and the costs are really cheap. Then there's moments and it goes away because they realize they mispriced it and basically we're giving the house away. So
kind of like long-term care contracts 20-something
exactly.
years ago.
There's windows where it's like, wow, this is cheap. This makes so much sense. And then it goes away and that's okay.
Of all the things that you look at in a given, month, week, or throughout the year, are there any investments that you think are sort of overhyped?
So this might be kind of controversial, but I'm going to say AI. And one of the reasons for it is obviously it's huge. It's a big deal, but I think it's more about the AI, the spend that may or may not happen from AI. You've already seen it to a large degree. It's more now about the future, right? Because that's why all these stocks are priced to the moon, is because we're thinking, okay, the investment in AI is just going to continue at this huge pace. But you had this instance, right, where we're working on all this amazing AI technology. China comes out with DeepSeek, I think it was called, and they spent something like, I read $6 million.
Yeah, $6 million was in the headlines, although I'm not sure I believe
Who
that.
knows exactly, and sometimes, right, when numbers come from China, we have to take them with a bit of a grain of salt. But I think that the idea that you are planning on billions and billions of dollars of investment and that potentially there's quicker, easier ways to do some of the same things, it just brings into question this blanket assumption that, like, of course we're going to spend at this level. That doesn't mean AI is not going to be a big part of the future. It's just a question of, like, how great is that investment? I think it's going to depend on what's the price of that company, because you can have a great company and it's a bad price and then it doesn't make a good investment. So not that, again, it won't continue, and there will be big winners, by the way. And as we typically see with these things, there will be losers as well. So it's a tough one to just be like anything in AI, and that's going to take off, because that is how it's been played out in pricing. I don't know that continues forever.
I guess it is a little frustrating because it's very similar to the late 90s and the dot-com bubble, where anything that had a website, a dot-com name, had these extreme valuations. And so you're kind of saying that AI in some form is similar to that. But I mean, there's no looking back. AI
No, it's happening. It's a thing. And I don't want to offend you because I know you love AI very deeply. At night under your pillow, you say goodnight.
I just like technology. I'm fascinated by the use cases that we all use technology today. I mean, when I was growing up, we had the Encyclopedia Britannica. I probably read maybe 20 pages before I ever fell asleep. But today, in my cell phone, I've got an entire encyclopedia.
You do. You still remember how to read, though, right?
Barely.
Okay. We should just keep that in mind. I get it. And again, it's going to be a big deal. I will say I'm not the best at technology, and I do remember watching Terminator. So I just, I know it's too late. So it is what it is at this point, but yeah, it makes me nervous.
So AI and technology is potentially overhyped or overvalued from a price standpoint.
Yeah, a lot of it's price related, but yes, that's my feel. That doesn't mean there aren't opportunities. It just means the idea of, like, broad anything in AI, I don't subscribe to.
So then what's overlooked?
So it might not be overlooked by us or our clients because they are experiencing it, but I think gold is tremendously overlooked. And one of the evidence of that is the fact that you've had a tremendous year for gold. It's performed extremely well. And in addition, even the gold mining stocks, which can be very volatile, have done even better. And you're still not seeing net inflows. It is very natural, normal investor behavior for something does well, more money pours into it. It's just sort of a hated asset class. And I think a lot of people don't understand it. And I get that, actually. Gold as an investment is very confusing. What's the price? There's no yield. Lots of valid pushback and reasons. We really think of it as an alternative currency. It's like they can print dollars. Most of your assets are in dollars. Here's an alternative they can't print. And so that's, by the way, that's why gold's doing so well this year. It's not because it intrinsically is worth more. It's just because the dollar is going down. So it's really a hedge against that. And so again, almost 100% of people's net worth is in the US dollar. The idea of having some percentage, there's a hedge in gold, makes tremendous sense, but the broad market does not agree with me.
So if you like gold, then at these prices, you probably like gold miners then too, because gold miners sort of a leverage play on gold. And I think Jeff shared something earlier this week that it costs a gold miner, $1,400 to dig an ounce of gold out of the ground. Well, gold's trading at $3,300 an ounce. So that's a huge profit margin.
These companies are going to be tremendously profitable for some period. They are companies, though, so the issue becomes now it's a business, and is the business well run? And in the past, I think people are a bit traumatized. I actually don't blame people for not going and piling into the gold mining stocks, because in the past these were really badly run. Like, these were crappy businesses. And
I used to watch the show on National Geographic. There was the whole gold mining thing in Alaska.
I'm not saying they were bad at gold mining. I'm saying the business part didn't work. Over leverage and overextending and pouring a bunch of money into there was some major mismanagement in the past, and I think a lot of them have become a lot more fiscally responsible. But again, is the market going to give credit for that, and when will they give credit for that? It's going to be hard to ignore, I think, some of these profits that are going to come out of these companies. So we'll see if that becomes more popular or mainstream. But it's an interesting concept too for the upside of gold, because even if you get even pensions more broadly, if everyone decides they need to have an X%, even small, right, a few percent gold allocation, that's going to put a lot of buying pressure, pushing the price upward theoretically. Again, I'm not holding it for any of these reasons, like, the price, it's 3,000, the price target should be 4,000. That's not, I think that's really tough to do with any level of accuracy, especially short term. It's just because I don't want all my assets in the dollar.
That's a good point. I mean, as a chief investment officer, I would love for you to have a crystal ball. It would be amazing.
Me too.
Are there any investments that
I would be retired, just for the record. I would like send you guys ideas occasionally from my yacht.
I would like a big boat too, but I don't see you or I ever retiring anytime soon.
That's fair.
As it relates to investments in the world that you live in, are there any investments that you see out there that people, it's either difficult for them or they cannot access on their own, but they can access here?
I think a lot of stuff. So a lot of the more niche alternative investments, people really should not do it on their own. And I actually have clients who like to try or look at it, but because similar even to the gold mining stuff, it's a business. And so when we're assessing the risk of some of those investments, it's not just, is the investment good? It's also, it's a small business. Is it being run properly? Are there the proper third-party controls and oversight in place? Like, this is a big deal, because you can have the best investment in the world, but if you do not package it properly, secure it, it does not matter. And so I think that really any of these things that are a little more niche and off the run, if you want to go into those kinds of investments, you really need a professional to come in and assess and say, even just, again, forget the investment, operationally, does this check all the boxes? Are you safeguarding your assets properly? But so that applies to niche kinds of private credit, real estate, any of these private assets where it's a private loan, so it's not something that's publicly traded, there's not easily available public information on it. I think that really applies.
So you care a lot about the management team, the strategy itself, the structure that it's in, the fees that are associated with it.
I care about all of that, and then I care that someone else is watching all that to make sure they're actually doing what they say they're going to do. Like, I have a lot of skills. Trust is not a super high on the list of my skills. So it's a lot about, you try to meet people, you try to find people you think are good people who are going to do the right thing in difficult times. And then you get a bunch of people to watch them and verify and make sure that all the cash is staying where it's supposed to be, and all the, again, boxes are getting checked, I's dots, T's crossed.
How much do you care that they have their own money invested alongside with it?
I care a lot. The amount of money actually matters less to me than that it's meaningful for their net worth. Because sometimes you get smaller managers maybe who don't have as sizable of like personal net worths. And so they're putting in $500,000 or $1 million. So you think, well, that's not that big a deal relative to all of it. But for them, that's like their entire investable net. They have that in their house kind of thing. And they had experience somewhere else and they built up whatever, but this is really their nest egg to a large degree. And then the other pieces too, are they reinvesting? A lot of managers will take their performance portion of their fees, and if they don't need it to support the business, they'll put it back into the fund and just keep reinvesting it and letting it grow. And so I like to see that as well, because it feels like now they're doubling down, right? Every time they get paid, basically they're doubling down.
So I have a fun story that clients won't really know about, but about 6 years ago, I went to an alternative investment conference in downtown LA.
Okay.
And I walked in, and on my name tag it said Chris Gillespie, Morton Wealth. And this guy grabbed me. He was a private lending manager. And he said, I was just in your office yesterday. Megan beat me up so bad. She just berated me on fees and structure. And I was and he was so blown away by your knowledge and your experience in that. And even though you said no to his investment, 2 weeks later, he sent his best friend to us to become a client. Do you remember that?
I do remember that story. He was a really nice guy. I'm pretty sure he deserved it related to the fees and the structure and stuff. But look, I mean, hopefully people appreciate that. Again, we're in this to look out for their best interest. We don't get paid more for one investment versus another investment. So our entire 100% of our motivation is just picking the best possible investment for clients, and that's it.
Megan, it's been a lot of fun talking about investments, our philosophy, kind of what's out there in the day, what's out there that people can access, and kind of sort of under the hood of what you guys look at and make decisions.
Don't be too jealous. You can, we'll interview for the investment team if you're really interested. But
Thank you.
thank you so much.